Everybody's preaching their book. But that's not my responsibility. My responsibility is to get to the bottom of what happened and why. And that's my obligation as a committee chair, and to look into this matter and understand. What we know at this point is you have a couple of theories of the case. One, mismanagement. Obviously, the firm failed. Two, supervision, right? Whether or not those that were tasked with overseeing the bank in the regulatory sphere did the right thing. Third, regulation. Fourth, law. And then fifth is this macro question about the economy, the fiscal house that inflamed inflation, and then the Fed response to it and the rapid rising rates. So you have 5 buckets of theories at this point, and everyone has jumped to their natural conclusion to give the answer here. We have to first figure out why this happened and determine in a really quantitative and qualitative way what happened.
So you can't tell us now if the bill passed in 2018, in fact, was partly to blame, or maybe a better way to say is the original Dodd-Frank would not have prevented this from happening.
Well, the original Dodd-Frank and then the update in S-2155, the bipartisan bill that passed in 2018. The theory is, among some, is that changed it in such a substantial way, Dodd-Frank, that they could have seen it under the original law but didn't see it because of the regulatory change. The first studies of this and the indication from bank analysts is that that's not the case. The liquidity cover ratio, this bank would have passed.
Should the Fed be investigating themselves? This is almost the third scandal under the Fed. There's the trading, there's the Kansas City, the Rare Masters account for the fintech firm, and now there's this. And the Vice Chair of Supervision, Michael Barr, will be investigating his own Fed. Why not have an outside probe?
Well, Congress will look into this, as we should. We created the Federal Reserve. Would
you be in favor of that? Like what Elizabeth Warren says, like an outside investigator?
Everyone in Washington wants to look around for an unbiased source of information, right? Good luck. Everybody has a perspective. We will certainly investigate this on Capitol Hill, and my committee will look into this. We have regional Fed challenges that we've seen, and you've marked three. This is the third example of it. We need to get to the bottom of how regional feds are operating, and whether or not we have to update the laws and constraints around those regional Federal Reserve boards and their leadership.
Mr. Chairman, should Congress pass a law that guarantees, that ensures all deposits? Because we seem to be in this de facto world where that is the case.
Well, there's a lot of debate about that. Now, what I want to understand are the knock-on effects if you do that. What does that do to the banking system long term? How does it change the allocation of capital? We have a vibrant economy in many respects because we have a diversity of lending options in the United States. I want to keep those diversity of lending operations, of options. I also want to keep the ability to fail in America because in a capitalist system, the inability to fail means that you don't actually prove out what is a bad idea, bad structure, bad performance. We have to ensure that you can fail without systemic consequences. So we have to make sure we understand the effects if we make deposit insurance permanent for every deposit, or if there are other structures in place where we can actually have a better understanding and better liquidity provision for institutions.
I want to ask you about the debt ceiling. President Biden has his proposal with a budget. We don't have the Republican budget just yet, but we are getting closer to the X date. You know this. Where's the response, and where are the negotiations right now?
Well, the negotiations started with the president meeting with the Speaker of the House for the first time a month and a half ago. There have been no additional meetings scheduled, no additional talks. The president released his budget last Thursday. Events have overtaken, obviously, and since then, and the focus has been a little different here in Washington. But we have to engage in serious negotiations between House Republicans and the White House. That's how it has to happen. I think we should get through this without drama. In light of the economic situation, in light of the constraints in our financial system, we have to get through this with as little drama as possible, and that's my motivation. We also have to address the fiscal house. Spending is up dramatically from pre-COVID. And we have conservatives that run the House of Representatives that want to address that fiscal question. And I think we should. But we also have to ensure the balance between what we can pass in the House with what the White House is willing to accept as well. It's a tricky negotiation, and frankly, until the president released his budget last Thursday, there were not serious talks. My hope is we get into those serious talks.
Mr. Chairman, thanks for your time today. Appreciate your answering all of our questions. Don't be a stranger here at the table. It sounds like we have some things to follow up on.
A few things. And
you have a lot of work cut up for you.
Well, and what a time to start a new show. A slow news week, nothing going on.
We thought we'd ease into it.
Yeah, I should have known when you're kicking this off that something was going to go haywire.
We caused it. It's true.
Thank you, sir.